The petrodollar system from 1974 till today. Now, beginning in 1971, after the breakdown of the Bretton Woods system, currencies around the world all became fiat currencies, and the global monetary system became less ordered. This was the first time in human history that this has ever happened, where all countries in the world at the same time were rendered onto unbacked paper. A fiat is an absolute decree from a person or institution in command. Fiat currency is just a monetary system whereby there is nothing of value in the currency itself, just paper, cheap metal coins, or digital bits of information. It has value because the government declares it to have value, and that is a legal tender to pay all things, including taxes. Now, a country can enforce the usage of fiat currencies as a medium of exchange and unit of account within their country by making all taxes payable only in that currency, or by enacting other laws to add friction to, in some cases, outright ban other mediums of exchanges and units of account. If their currency has a big enough problem, though, as is the case for many emerging markets, a black market will develop for other mediums of exchange, such as foreign currencies, hard assets, or maybe even cryptocurrencies. Now, a fiat currency system can face particular problems when trying to be used outside of its home country. I mean, why should businesses and governments in other countries accept pieces of paper which can be printed endlessly by a foreign government and have no firm backing as a form of payment for their valuable goods and services? Without a real backing, what is it worth? Why would you sell oil to foreigners for paper? In the early 1970s, there were a variety of geopolitical conflicts, including the Yom Kippur War and the OPEC oil embargo, and in 1974, the United States and Saudi Arabia reached an agreement from which the United States would lever their military for Saudi Arabia selling their oil in dollars, and from there, the world was set on a petrodollar system, a clever way to make global fiat currency system work decently enough. Now, we think of this as normal, but this 5-decade period of global fiat currency is unusual and unique in the historical sense. Imagine trying to architect a way to make an all-fiat currency system work on the global stage for the first time in human history. So in doing so, you have to somehow convince or force the entire world to trade valuable things for their foreign pieces of paper with no guarantee from the paper issuing governments that those papers are worth anything in particular, in relation to an amount of gold or other hard assets. With the petrodollar system, Saudi Arabia and other countries in OPEC, and OPEC just being the oil-producing countries of the world, sell their oil exclusively in dollars in exchange for U.S. protection and cooperation. Even if France wants to buy oil from Saudi Arabia, for example, they do so in U.S. dollars. Any country that wants oil needs to be able to get dollars to pay for it, either by earning them or exchanging their currency for them. So, non-oil producing countries could also sell many of their exports in dollars, even though the dollar is completely fiat foreign paper, so that they can get dollars for which to buy oil from oil producing countries, which makes great demand for the US dollar. Now, all of these countries store excess dollars as foreign exchange reserves, which means they just mostly put that in US treasuries to earn some interest. In return, the United States uses its unrivaled blue water navy to protect global shipping lanes and preserve the geopolitical status quo with the military action or threat thereof as needed. In addition, the United States basically has to run persistent trade deficits with the rest of the world to get enough dollars out of the into the international system. Many of those dollars, however, get recycled into buying U.S. treasuries and stored as foreign exchange reserves, meaning that a large portion of U.S. federal deficits are financed by foreign governments compared to other developed nations that mostly rely on domestic financing. The petrodollar system is creative because it has one of the few ways to make everyone in the world accept foreign paper for tangible goods and services. Oil producers get protection and order in exchange for pricing their oil in dollars and putting their reserves into treasuries. And non-oil producers need oil and thus need dollars so they can get that oil. This leads to a disproportionate amount of global trade occurring in dollars relative to the size of the US economy, and in some ways means that the dollar is backed by oil. Now, without explicitly pegged to the oil at a defined ratio, it doesn't make a difference. You need US dollars to buy oil. Now, the system gives the dollar a persistent global demand from around the world, while other fiat currencies are mostly just used internally in their own countries. This chart is 2 years old, but things haven't really changed much since then. What it shows is that even though the United States represented only about 11% of the world's global trade and 24% of global GDP in early 2018, the dollar share of global economic activity are far higher at 40 to 60% depending on what metric you look at. This gap represents its status as the global reserve currency and the key currency for global energy pricing. Now, the inherent flaw of the petrodollar system, much like the inherent flaw with the Bretton Woods system, is that as previously mentioned, the United States needs to run persistent trade deficits and is another version of the Triffin dilemma playing out yet again. This can work for decades, but unfortunately, it cannot work forever. Instead of drawing down our global reserves, or our gold reserves, however, we gradually draw down our domestic manufacturing base and it gets replaced piece by piece in foreign countries. When other countries run trade deficits, they eventually have a big enough currency devaluation so that their exports become more competitive and importing becomes more expensive, which usually prevents a multi-decade extreme from building up. However, because the petrodollar system creates persistent international demand for the dollar, it means that US trade deficit is never allowed to correct and balance itself out. The trade deficit is held open persistently by the structure of the global monetary system, which creates a permanent imbalance, and is the flaw that eventually, after a long enough timeline, brings the entire system crashing down. The other flaw in the system is that it incentivizes mercantilism, and this simply means it incentivizes various trade partners to maximize their exports and minimize their imports by manipulating their currencies to weak levels. Since currencies around the world are fiat with floating exchange rates, many countries try to keep their currencies weak so that they have a positive trade balance with the United States and other trading partners. They do not want their currencies to be so weak that their citizens can't import anything, but they want their currencies to be weak enough so that their exports are very competitive and their importing power is not strong, so that they can run trade surpluses. This allows a country to rapidly build up its industrial production and accumulate dollars and reserves. As the global reserve currency, the United States is basically excluded from this option, so we're the ones left holding the bag of persistent trade deficits. Some of us, particularly near the top of the income ladder, directly or indirectly benefit from this system. Americans who work around finance, government, healthcare, and technology get many of the benefits of living in the hegemonic power without the drawbacks. On the other hand, Americans who make physical products tend not to benefit because they lost their jobs or had their incomes suppressed, and thus haven't benefited from the gains of the US global currency system. And outside of the United States, exporting countries benefit from the system, while countries that don't like how the global monetary system is structured don't have much recourse to do anything about it unless they get big enough, like Russia and China.